This is Bloomberg Surveillance Early Edition with Danny Berger and Aneeka Gupta.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Putin responds. The Russian president denounces leaders of the Wagner group as traitors in his first public comments since the aborted mutiny. China's premier calls on countries to cooperate as global challenges and regional conflicts keep flaring up. That warning comes as U.S. Treasury Secretary Janet Yellen plans a visit to Beijing. And Christine Lagarde delivers the opening speech at the ECB's annual forum, maintaining a hawkish tone. We're live in Sintra, Portugal, with a member of the ECB Governing Council. Happy Tuesday. Welcome to Bloomberg Surveillance, the early edition. I'm Danny Berger in London. Aneeka Gupta is in New York. Kriti, maybe no clear catalyst today, but you can definitely say we're nibbling around the edges of risk after yesterday's sell-off.
Perhaps just a little bit more appetite, Danny, but it's interesting. At the same time, we have geopolitics still kind of playing a little bit of a role in the background with the Russia story and the developments we are getting out of there. But a lot of the narrative is turning right back around to the central banking story, to the growth story, some reassurance perhaps coming overnight from China. And I think that perhaps is what's driving the trade here. This idea that even in the face of slow economic growth, something that a lot of people are concerned about kind of being exported to the rest of the world from China, you perhaps are still seeing some support from the PBOC, and that is important, again, when it comes to the read-through for the rest of the world. I'm going to start from the bottom up here, Danny, because that is a big part of what drove up the Asia session. Simply this idea that you did see right at the onset a stronger than expected fix when it comes to the yuan. And this is important because this is the biggest spread you've seen from the daily estimate to what actually happened this year. You have to go all the way back to last year, early last year, to find the last time we saw this kind of spread. Now, what's important here is that it essentially signals that the PBOC is not accepting, I'm going to get that word right, a weaker yuan. And what's important is that it continues to signal that because that's what's going to prop up the currency. As a result, you do see dollar weakness and strength in those China-exposed commodities, copper, iron ore, commodities like that. As a result, the Chinese trade is then perhaps seeping into sentiment, at least in the U.S. trade. Seeing futures higher by about 0.2%. I wouldn't call it major momentum, major conviction, but perhaps, as you put it, nibbling around the edges of risk appetite. What's interesting to me is at the same time you have that nibbling around the edges, Danny, you see a pretty big bid into the front end of the market, especially when it comes to the bond market. The two-year yield, 468. It's only 5 a.m. in New York and already seeing a move about 6 basis points lower there.
Yeah, I wonder, at least when it comes to equities, how much of this is kind of month-end weirdness that maybe you want to sell equities, maybe you want to buy bonds. If that's the move you're doing, we've, of course, had this really big run-up. Deutsche Bank pointing out that we haven't had a 3 to 5% sell-off in some time. Maybe we're due for it. But again, nothing to necessarily push us there. A lot of markets unchanged in Europe this morning. FTSE 100, that's barely changed. We've had a really tough run for the mid-cap index, those concerns about the UK economy. Bloomberg Intelligence says that we're heading for recession in the UK by winter's time. FTSE MIB, IBEX, those performing a little bit better. So on an index level basis here in Europe, we are struggling to maintain any gains. We were up this morning. We've started to fall out from that. We're down about 0.1%. One of the worst performing stocks is EQT. This is a private equity giant. It is the third biggest private equity firm, judging by how much they've been able to raise over the past 5 years. So then perhaps it is troubling, according to people familiar, that they've had to extend their fundraising timeline for their 20 billion euro fund. If EQT is having a problem fundraising, probably everybody is. Again, this is such a brand name here in Europe. Now, Kriti, we mentioned that we are in Sintra, Portugal. It is the forum for the ECB. So far, we've really just heard from the hawks. We've heard from Kazakhs saying that we want at least one more hike in July. Too soon to say whether that is the only one. Christine Lagarde saying that they need to get down to 2% come what may, sounding her hawkish self. So the euro gains. Sterling, that is also gaining. We did have an inflation report about groceries. Those have come down, but Kriti at 14.6%. Food inflation in the UK is absolutely still too high.
Certainly a story that we are watching as we continue to monitor the cost of living crisis over in the UK and broadly, I would argue, Europe and the rest of the world as well. Danny, geopolitics still at the center of the conversation, especially when it comes from the fallout of the Russia story over the weekend. Vladimir Putin has now condemned the Wagner mercenary group as traitors to Russia. The president made a late-night speech to the nation, his first public comments since the mutiny that posed the most serious threat to his almost 25-year rule.
Дорогие друзья,
Dear friends, today I address once again all Russian citizens. I thank you for your endurance, solidarity, and patriotism. Civil solidarity showed that any ransom, any attempts to organize internal unrest are doomed to fail.
Joining us now for more analysis, Bloomberg's European correspondent Maria Tadeo. Maria, Interfax reporting in the last hour that Wagner will hand over heavy weaponry to the army. Is this the beginning of the end for the group? What are you hearing?
It really could be, and it looks that way. We have today the Russian MOD, the Ministry of Defense, saying that Wagner has now agreed to transfer some of their heavy weapons to the Russian army. You remember also yesterday, Vladimir Putin gave them three options. Those who did not participate in the march to Moscow could either join the actual army, the Russian army, they could go to Belarus, or they could go back home. What we're seeing here is what could be the beginning, as you say, of the end for Wagner. At the same time, we know that Prigozhin, who led this group of mercenaries, his future is also unclear, but it is by now almost established that Vladimir Putin, to some extent, even though the optics are bad, has managed to contain the situation. And again, the question is, if you're Wagner, you don't have the weapons, your leader is nowhere to be seen, and you don't have any troops, do you even exist? At this point, it's fair to say, well, not.
What do we know about Prigozhin and where he is and what his fate might be?
Look, that's a very good question, and there's a lot of confusion because we know that yesterday he put out a voice note, actually 11 minutes long, where he explained some of the reasons for the events that took place on the Saturday. He said and repeated he did not want to overthrow or topple anyone. We know that yesterday President Vladimir Putin, however, said the masterminds behind would be brought to justice. But we have another twist in the saga. The MOD today now says the investigation into mutiny appears to be closed, so that would be perhaps good news for Prigozhin. We know that there is a private plane that allegedly belongs to Prigozhin that has landed in Minsk, that is in Belarus. We also heard this morning from Alexander Lukashenko saying, I will honor my part of the deal, that is to host Prigozhin. But the big question is, where is he? Nobody has seen footage, pictures, nothing. We still don't know where this man is.
Maria Tadeo covering every angle of that story. We'll keep you updated from Brussels. Thank you, as always. From Russia, we go to China. China's premier warning governments against politicizing their economies, saying it would only fragment the world. He spoke in a keynote speech to global business leaders.
Some in the West are hyping up the so-called phraseologies of reducing dependencies and de-risking. These two concepts, I would say, are false propositions. Governments and relevant organizations should not overreach themselves, still less overstretch the concept of risk or turn it into an ideological tool. We should oppose the politicization of economic issues and work together to keep global industrial and supply chains stable, smooth, and secure. Without peace, nothing can be achieved. This is a hard lesson humanity has learned from history.
Joining us now is Bloomberg Asia government and politics correspondent Rebecca Chung-Wilkins. She does a little bit of everything. Rebecca, is this really a new message coming out of China?
Well, it's Li Qiang's only his second major public speech since he took that job as premier. And the tone, I would say, did strike sort of slightly differently to the other messages we've had from authorities recently. He was very sanguine and really quite positive and bullish about prospects for China's economic recovery. Really confident that China would meet its target, and also that it had sort of positive momentum. Now, that's slightly at odds with the messages we've had separately, which emphasize, for example, the challenges that China is facing and acknowledging the need that some kind of stimulus, some kind of support, for example, for the property sector is still needed. Now, there wasn't any mention of that by Li Qiang, and that's really what investors are looking for, any kind of clarity over what substantive stimulus we may or may not see. And all of that, as you say, was sort of wrapped in this message, this warning to the US and its allies that this push to curb China is fragmenting the world economy.
And then at the same time, I don't know exactly how this bodes. You have China banning a prominent financial commentator on Weibo, who had some 4.7 million followers because he commented on the stock market and unemployment rate. Rebecca, you combine that And then you combine a Janet Yellen who is planning to visit Beijing shortly. What does all of this mean for foreign investment in China?
Well, I think it's clear that from Beijing, the messaging around what's happening in the economy is still very, very tight. And clearly, they are still sort of trying to work out precisely what they're going to do to support the economy. All eyes for foreign investors in particular are on this July Politburo meeting, whether we see any more measures to support the economy. Then, of course, this Janet Yellen meeting happening at a very sort of interesting time, prospectively going to happen in early July, and late July is when we may see that executive order being confirmed by Biden that may look to regulate or even constrain some of US investments into China. I think the broader message, if we do see this Yellen trip going ahead, the second cabinet member by the US to visit China after Blinken, of course, if we do see that going ahead, there will be another sign that perhaps China and the US may be finding a way to disagree together. Even as tensions continue, conversations at the high level are still managing to roll on. So that might be a sort of brief glimmer of hope for some foreign investors.
Okay, Rebecca, thank you very much. That is Bloomberg's Rebecca Chung-Wilkins. Now, over here in the UK, Odey is suspending its flagship hedge fund after being hit by redemption requests from investors fleeing the firm. Bloomberg finance editor Michael Moore joins us now with the latest. So, Michael, it's not just some of these firms, some of these funds on the sidelines here. This is their flagship fund they're now suspending.
Yeah, and in some ways it's not a surprise because Crispin Odey was the main portfolio manager on this fund. So you have to imagine that fund has shrunk in recent years. Those who had held on truly seem to be believers in Crispin. So now that he's gone, you kind of lose that superstar who was running that fund. So both funds that we're seeing today, the flagship and the other one who are suspended, were both had Crispin Odey as a portfolio manager. We've also seen other funds that he didn't run also have to be suspended because of the redemption requests. So the company is trying to reassure investors and keep them on board despite all the turbulence.
So that is the Odey story. Michael, talk to us about the Credit Suisse story. A fine of just shy of about $1 million, which, to be fair, is only $1 million for a major bank. But talk to us about why they were fined in the first place.
Sure. So this is about bond reporting and reporting of prices. This went on for a number of years. We've seen other banks run into this issue as well. I think what it kind of indicates, you saw them agree to the fine on the same day that the UBS deal closed. And I think this just points to UBS has said there's $4 billion roughly in legal settlements and other costs that they're expecting. They want to knock out as much of this as possible in the short term to try to clear some of those books as they go through this massive integration. Yeah,
and I guess 900,000 is kind of peanuts in the grand scheme of things here compared to $4 billion that they have to get through. Michael, thanks so much. That is Bloomberg's Michael Moore. Now, coming up, we're going to go live to the ECB forum in Sintra, Portugal, with Lithuania's central bank governor, who's also a member, of course, of the ECB Governing Council. That's Gediminas Simkus. That conversation shortly. And WisdomTree's Aneeka Gupta sees a high-risk correction in this equity market. We're going to get more on that later this hour. This is Bloomberg.
It is unlikely that in the near future, the central bank will be able to state with full confidence that the peak rates have indeed been reached. Bearing a material change to our expectations for inflation, we will continue to increase rates in July.
ECB President Christine Lagarde there speaking at the ECB forum in Sintra in the last hour. Bloomberg's Francine Lacqua is also there in Sintra on the ground and joins us now with a member of the ECB Governing Council. Francine.
Yeah, thank you so much. I'm delighted to be joined by Gediminas, Simkus, of course, for a good conversation, or a buzz conversation, I would say, on whether the speech by Madame Lagarde was too hawkish in his eyes. Thank you so much, Governor. When you look at what we heard from Christine Lagarde, we heard two things, at least I heard two things, that inflation is a problem, that they will continue hiking, and then we could and should be ready for higher for longer interest rates. What is the market misunderstanding right now?
Well, so I really need to agree that, there is still some ground to cover. We are not done with hiking, and I cannot conclude, that we would have the last hiking in July. But let's wait and see for more data, for projections, and we'll decide. What's very important that we talk a lot about the current headline data, current headline inflation, current core inflation. But what the monetary policy does, it attacks the inflation forward look in the future. So what we need to make sure, by keeping interest rates in the restrictive territory as long as it is needed, that the inflation in the medium term gets back to where it has to be, 2% target.
But so what happens, so you're staying there until you see inflation come down. With it, we'd probably see a protracted recession. I don't know whether that's in your base case. And then do you cut rates straight away, or do you keep it there for a little bit longer?
No, I mean, you in a way try to draw a certain strategy in advance, but what's very important that data is constantly changing. So in a way, they are consistently surprised by the more, so to say, more sticky inflation as we have been thinking before. So it's very important to understand that, like in 3 months, or in 6 months, we will take the decisions on the basis of data that we have at that moment. So I think it's a bit premature to draw exactly what could be the path. Yeah.
But Governor, and I understand you're data dependent. I understand this is tricky, but why are the forecasts so wrong or so difficult to get ahead of? And at the same time, because you've raised rates so much, what if it catches up and you see a downturn very quickly?
Well, I don't think this is very much plausible scenario, right? So what we do, I mean, let's look at the data that we have now in hand. So first, inflation is, wages are growing twice as much as like long-term average, and will keep growing like next year and the next year. Second, we saw that the headline inflation was also pushed by increased margins of the companies, right? So then the question is, how would they decrease? To what extent they would decrease, and to what extent the companies will push through, the increase in costs towards the final prices of goods and services. Energy, I mean, it fell down, but now it's at the level that is twice as big as they were before pandemics. Again, there is some so to say sensitivities, and how the prices may change. Food price inflation, it's still very high.
Are you talking about the instability in Russia and what that may be for energy prices going forward?
Absolutely. I think this is the black swan. So, I mean, I'm sure that Ukraine will win eventually, but there's like real war happening there. Russia, real war happening here, and what we saw, over the last weekend. So the things might start, evolve, and finish very quickly in an unexpected way. And whatever is the outcome, I mean, it will have some economic consequences.
Governor, are you concerned that if there's no hike in September from the ECB, then there's going to be some kind of spiral that, wage increases, price increase, and it's something structural that the ECB will really struggle to get ahead of?
So you said that there's going to be no...
Are you expecting a September hike from the ECB?
I think there's going to be so on the table, and we will make decision on the basis of data. So I cannot say at this moment that that we're going to hike or we are not going to hike. What's clear, we're going to hike. I think we need to hike also in July. But getting back to the question on the wage price spiral, I don't think we have yet this kind of phenomenon at the moment. Why? Because I tried to explain, wage price spiral as a certain spring, which is compressed by expectations. So, and it is compressed. So when you look at the expectations by market analysts, to consumer expectations, you see that they are not diverged from 2% target in the medium term. So this spring is still compressed. Yeah. Our goal is not to unleash it.
Okay, what would you do to vote for a pause? So what would it take for the ECB not to continue hiking?
Well, So we should not mix it up, the means and the goals.
Yes.
We are talking about the means. Hiking is means how to put inflation to the cage. So inflation, this is in our mandate, is indisputable, and they need to get inflation back to the target. So we will hike, we won't hike, or we will keep interest rates as long as it is needed to put inflation back where it has to be.
But if you look at the timeline, and again, do you wait for inflation to be 2%? Does it have to be on a trajectory down? Like, how are you thinking about the mechanics of when the right time to pause is?
That's a very good question. And, there are a lot of discussions. What's the difference for the medium term between inflation 1.9 and 2.1? I mean, whether you hike or you won't, so what's the data? But the main thing for me, I think that we see that inflation is consistently, determinably, is getting back to 2% target. So far, with the best technicians at the ECB and at the national central banks, we still see that we still, so to say, have inflation above 2% in the medium term.
Yeah, but so why not commit to a hike in September then? And say, look, July will hike, September will hike.
I mean, the environment is such uncertain. There are so many factors that are affecting the economy as well as the inflation that there is no point to commit. So we should not exclude the possibility that we're going to hike, that we might hike in September too. And that's what I'm saying. I will not be surprised to continue hiking also in September.
So the ECB, and it's crazy actually to look back at the last 12 months on the fact that when we were here in Sintra last year, since then the ECB has hiked 400 basis points. What surprised you the most in those 400 basis point hike? That nothing is broken, that inflation is still high, that monetary policy takes longer to impact the economy?
Well, what surprised me is that we are talking so much about the current headline and core inflation, also understanding that the effects are coming into effect only at least in 18 months. So that's one thing. The other thing, what surprised me about the economy, that having also the contracting, even marginally, but still contracting economy, euro area economy, last quarter last year, this first quarter this year, we still have so resilient, so tight labor market with unemployment even falling. I know that there are many explanations why it could be so, but still, it's in a way a bit, so to say, contradictory according to the standard textbooks. And this like pictures this economic landscape that we are living now in, again with somewhat different colors. The same differently as we were living through the last 3 years, like starting with COVID pandemics, the effects, supply shocks, Russia's war against Ukraine and all the consequences. This is, again, like new colors into this new economic landscape.
You're right. We haven't seen this in a textbook. So is this because of COVID? Is this a structural change in the economy? Or are we just delaying a sudden downturn?
So sometimes I like to see, I see my countries like Baltic states as certain, small, open, very liberal market economies, which like leading indicators. In Lithuania, we do see that there are some changes in the labor market already. And also we do have this technical recession at the moment. So like, yes, I understand that in each country there could be also a different story. But in euro area, even with this contraction, actually the economic is getting back to the growth. So we need to admit this. And the wages started growing, and there's going to be a real wage growth, implying that consumption will be better. So, there are factors that might think let you think that the labor market will continue tight. In particular, I think there is one more important thing. Why, in such an environment, companies do not lay off people?
Why?
I think it's because they think that this contraction is just short term. So they, as Madame Lagarde was explaining, they are hoarding people, they are hoarding workers, because they know in the tight labor market, if they lay off them, they won't be able to find them.
Are you suggesting this is a mistake?
No, I'm not suggesting this is a mistake. I think there are many downside risks, but when I look at the euro area's economic projection, I see growth, like annual growth this year, even better growth next year.
Governor, thank you so much, as always, for your time. That was, of course, the Lithuanian Central Bank Governor, and with that, I'm going to send it back to you in New York.
Francine Lacqua in Sintra with Lithuania Central Bank Governor, she said, who's also a member of the ECB Governing Council. I have to say the standout comment was at the very end there. The idea that there's growth this year, perhaps even more growth next year, kind of contrarian to some of the recession calls we were hearing from around the world. Coming up, Aneeka Gupta, Director of Research over at WisdomTree, joins us next. How do you trade this environment? We're going to ask her. Stick with us. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. Putin responds. The Russian president denounces leaders of the Wagner group as traitors in his first public comments since the aborted mutiny. China's premier calls on countries to cooperate as global challenges and regional conflicts keep flaring up. This warning comes as U.S. Treasury Secretary Janet Yellen plans a visit to Beijing. And Christine Lagarde delivers the opening speech of the ECB's annual forum in Sintra, Portugal, maintaining a hawkish tone. Moments ago, Governing Council member Gediminas Simkus echoed her sentiment, saying the ECB is not nearly done with hiking up rates. I'm Aneeka Gupta in New York with Danny Berger in London. Danny, geopolitics aside, the narrative is very quickly coming back to exactly what these central banks around the world are going to be doing. The ECB, on the one hand, sticking to that hawkish tone. The PBOC, on the other hand, taking a very different stance.
Yeah, okay, maybe we've seen a hawkish tone from the ECB, though, Kriti, because we've really only heard from the hawks so far at Sintra. I mean, Christine Lagarde, chief among them, literally chief among the central bank. Simkus, another one who leans more hawkish. So that's what we have heard, that folks there say definitely July and maybe definitely not ending hikes in July. So you are looking at a stronger euro versus the dollar today. We're still under that 110 level. Can we finally crack that despite the strength that has been trading in quite the range? Now, meanwhile, it's a soggy day for risk here in Europe. We're about the lows of the session, down over 0.1%. Leading some of those declines, one of the worst performing stocks is EQT, a private capital giant based in Europe. One of the biggest funds in the world has had to extend their timeline for fundraising, so that's dropping more than 4.5%. Sterling really struggling to hang on to any strength this morning. We did get some shop price inflation from the BRC in today. It has cooled off somewhat, but still those figures are really high, but still most of these currencies strengthening against the dollar, Kriti.
Well, and that dollar weakness absolutely extending to the Asian session as well. Before I get into what we're seeing stateside, I want to talk about the Asia story because, of course, overnight we did get a stronger than expected fixing that did send, of course, the offshore yuan much higher relative to the dollar. We're looking at 7.23 on that rate. Again, this is the strongest level you have seen going back to about 7 months. And at the same time, it pushed things like copper, iron ore much, much higher. But you can see already that copper pairing a lot of those gains now almost virtually unchanged on the session, which brings us to what we're seeing in the U.S. trading day, at least early on. The futures higher by about 0.2%, perhaps a little bit of optimism, but again, not a ton of momentum, not a ton of conviction, because then you pair that with what you're seeing in the bond market, Danny, which is a massive bid into the front end of the curve. Not exactly something you would traditionally see in a kind of risk-on environment. 469 on the 2-year yield.
Yeah, that yield curve continues to flatten. We're at one point at 102 yesterday, which just gets us to the point, if this market is starting to price out cuts, they're finally listening to some of the hawkishness. Do you want to continue that trend? Joining us now is Aneeka Gupta, Director of Research at WisdomTree. And Aneeka, perhaps that's some of the reason we're seeing stocks or seeing risk assets a little bit lighter. Do you want to follow this trade? Are we starting to enter a hawkish-fueled sell-off, or is this just some month-end, quarter-end rebalancing?
Very good morning, Danny. No, I think it's a mix of, rising geopolitical risks that did spook the markets over the weekend. And alongside that, we're getting, more and more hawkish calls from a number of central banks. We started off the year hoping for a Fed pivot coming in much earlier than expected. We've only just arrived at a pause, and look at central banks in Europe. Here in the UK, we've had a much more aggressive rate hike being posted just last week, and calls at Sintra remain hawkish. We've just heard Christine Lagarde also reiterate that message. So that's clearly a headwind for stocks, because so far stocks have been gaining because of profits. Stocks have been gaining because of rising liquidity. And if central banks continue on with this message, continue to raise rates, and at the same time, tighten a monetary policy, that's going to have a big impact on stocks.
Is there some degree to which we're just overextended? Deutsche Bank thinks we're due for a 3 to 5% sell-off because we haven't really had one in March. Is there some element of that? We've just gone a little bit too far here?
Well, I would predicate it largely on what have been the key drivers of stocks so far. They've largely been ample amount of liquidity. Companies have been posting pretty strong profits so far. And then if you look at stocks relative to bonds, dividend yields and earnings yields have been relatively attractive. That's all flipping over now. So stocks are not looking as attractive. If you look at dividend yields versus bond yields, they aren't looking as attractive now. Liquidity is being drawn out from the system, and profits are expected to come off. So if you have the three main tailwinds that were driving stocks forward in the first half of the year now start to turn the corner, that is going to likely put a lot of pressure on stocks in the second half.
But Aneeka, from a fundamental point of view, does that then change kind of the idea of just how quickly a lot of these companies adapt to, like you mentioned, the liquidity environment that is becoming less liquid, as you point out? Do you see kind of more incentive to invest in things like R&D and innovation? And could that, at the end of the day, have a more fundamental tailwind to the market?
Well, I think the name of the game, as we've seen so far, is companies that have been able to operate in a more lean function, companies that have, gone ahead with a lot of cost cutting or even layoffs have actually been rewarded by the market. So I think, a more proactive stance that has been taken by a number of tech companies has actually benefited those very sectors. So I think, companies will definitely have to be thinking on their feet at a time when liquidity is being squeezed.
Well, speaking of that liquidity getting squeezed, I want to bring to you a call from this morning coming out of Morgan Stanley. Ellen Zentner, the chief U.S. economist there, writing, quote, "We now think the Federal Reserve will hike in July. Our data forecasts have not changed, but our perception of the Fed's reaction function now points to a significantly lower bar to hike. We've added a 25 basis point hike to our policy path." Aneeka, that brings me to you. To what extent are these hikes being added in by a lot of these economists, strategists, and eventually the bond market as well, priced into the equity market?
Well, as far as probabilities are concerned, we are seeing an 80% probability for the July rate hike. So I would definitely agree with that view. And in terms of how it's getting priced in, we are seeing credit spreads now beginning to tighten. And as those credit spreads begin to tighten, that's clearly going to, squeeze companies' corporate spending plans and their capex spending plans, and it's going to make them think twice about their expenses and their borrowings going forward. So, how I see it playing out into the economy is definitely via tighter credit spreads. We already saw that in a number of the bank lending surveys that we received in Q1. That did show that a number of banks are tightening lending standards. Obviously, we've also had the banking crisis that's made them even more cautious, and that's an important factor that's going to play on companies' capex plans for going forward.
Aneeka, elsewhere in the world, over the weekend we had this rising up of tensions or mystery. I don't know exactly how you want to describe it, but concern here with the Wagner group and a potential mutiny. Now, most of it has kind of gone to simmering in the background again. But these sorts of flare-ups, does it change your mind? Does it make you rethink how we should be hedging and trading around geopolitical risk?
Absolutely, Danny. I know it appears as if it's gone into the background, and thank God it happened over the weekend. But I think it's a telling sign that investors should be prepared and ready to hedge these geopolitical risks that continue to haunt us and continue to repeat right across 2023. I would also caution that I don't think this is the beginning. This isn't the end. I think it's the beginning of a number of events that could unfold over the course of second half of this year. And I think one way to actually hedge those geopolitical risks is via commodities. commodities stand to benefit when you do see these geopolitical rise, especially, when the conflict involves Russia and Ukraine. We saw that play out in agricultural commodities. We saw wheat, given the fact that Russia and Ukraine are nearly the breadbasket of Europe and account for nearly 25% of grain supply. We saw these commodities actually benefit in the slipstream of this event taking place.
Well, there's also been really dry weather, which means, they've come down from it, but we've seen wheat, corn, soybean, all those kinds of agricultural products really spike up in the past month. How do you kind of judge that, too? How do you put weather into your consideration? These are things, Aneeka, that are, really hard to control. You either need a military analyst or you need a weather forecaster to try to understand this.
Absolutely. It's an unknown risk that exists in the market. And I think it's interesting to point out, over the last 3 years, we've had a repeated, cycle of a weather phenomenon called the La Nina. And this year, beginning July, August, we're going to start to see, the El Nino cycle actually take fold. And what that essentially means is you're going to have a much more warmer weather temperatures across the Pacific, which essentially results in extreme weather conditions in certain parts of the world. So take, for example, in the US, you're going to have extremely dry conditions, whereas in parts of Central Africa, you also have very dry weather conditions. And essentially, as a consequence of that, you tend to have places which are have a large concentration of certain commodities, such as in Africa, you have a large concentration of cocoa. That supply gets squeezed, and hence you see a shortfall in the market, and as a consequence, you see that being a very price positive environment. So hedging that extreme weather risk and having that weather premium in your portfolio would be a prudent decision to make.
Okay, Aneeka, thank you so much for joining us this morning. That is Aneeka Gupta of WisdomTree. Now, coming up on the program, Russia closes out its investigation on the Wagner mutiny. That's according to Interfax. We're going to get the latest next. This is Bloomberg.
We gave Putin no excuse to blame this on the West or to blame this on NATO. We made clear that we were not involved. We had nothing to do with it. This was part of a struggle within the Russian system.
U.S. President Joe Biden there in his first public comments since the Russian revolt. Joining us now on the ground in Kyiv is Bloomberg senior reporter for international affairs, Mark Champion. Mark, can we call this a revolt? We've heard Putin make the first comments of it, condemning the leaders of the Wagner group, but they stopped short of taking further action.
Well, they did. They did revolt. They crossed the border. They marched towards Moscow, and they shot down some planes. So. It was a serious moment, and now it seems to be more or less over. There was a very interesting speech that Putin gave, short and to the point, but if you listen to it carefully, he prioritized really the things that he's concerned about. First, he said that he thanked everybody for being completely unified around him, the state and Russia. Which wasn't exactly how it looked. Second, he said, we were very quick to make decisions. Again, it wasn't exactly how it looked. He just said it took a while to happen, and that they had everything under control in terms of, they would have been this would have been crushed eventually anyway, even without an agreement. But it wasn't obvious that the army had mobilized to do that. And finally, he reached out to Wagner, to the group and to its soldiers, and said, we're going to make space for you. We think that you're patriots, and I'm going to stand by a deal so that you can either join the defense ministry, go home, or go to Belarus. So he's trying to draw a line under it, but also to eliminate the sense that he was exposed as being weak or not properly supported.
So the end of the conflict, perhaps, but is it the end of the Wagner Group specifically? And the reason I ask, Mark, is simply because we're approaching that deadline that the Defense Ministry had put for a lot of these soldiers to sign on. I believe it's July 1st, so coming up this Saturday. That being said, Interfax in the last, I want to say, hour and a half or so, also reporting that some of the heavy machinery now going to be transferred from the Wagner Group to the Defense Ministry. So is this the end of that group?
I think that we don't know yet. I mean, they have a lot of operations in Africa, and those are extremely useful to Russia. We have to remember that he was really a creature of the system, and this was an intra-system dispute. You know, it's in some form, I'm sure that Wagner will continue, even if it's, you know, absorbed into the state structures, or there's someone else, you know, ends up in charge, or Prigozhin. We still don't know that. He you know, has been, we believe he's in Belarus. We still don't know. There are reports that Lukashenko in Belarus, the leader of Belarus, has ordered the construction of a base for some thousands of Wagner troops. So we'll have to wait and see, you know, what the fate of Wagner is.
Mark Champion joining us from Kyiv. We appreciate your live analysis as always. And we go from the politics in Russia to the politics right here in the United States. Former President Donald Trump is heard discussing what he calls secret information in an audio recording of a 2021 meeting in New Jersey after he had left the White House.
They presented me this. This is off the record, but they presented me this. Isn't that amazing? This totally wins my case, you know. Except it is like highly confidential, secret. This is secret information. See, as president, I could have did less about it. Now I can't, you know, but this is classic.
Now we have a problem.
Isn't that interesting?
Yeah.
It's so cool.
ABC News and other outlets obtained that audio recording of a 2021 conversation. Joining us now for more analysis, Bloomberg's Rosalind Matheson. Roz, walk us through the implications of this to actually have this evidence in the public orbit. What does that mean?
Well, it's interesting because this was actually included in the indictment at the time, but this is the first time that the audio of that conversation has been leaked out into the world. And as you can hear, Donald Trump sort of talking in a semi-knowing fashion that these documents were secret. They were classified, that he didn't have the right to share them, didn't have the right to declassify them, but he was doing so anyway, and that he called that moment very cool. And so that really goes to the heart of the prosecution's case against Donald Trump in a trial that may start in August, although they're trying to push it back to December, is the question of sort of intent and knowing. Like, did he have these documents by mistake, it was unintentional, or did he know that there was an error in keeping them? Did he do that anyway? Did he talk about these documents with other people who didn't have the right to know about the information in those documents? So really what you're hearing is sort of the basis of the prosecution's case against him.
Right, it is such a high bar to clear, to say not only did he do this, but he willfully and knowingly did so. What clue does it give us about what the prosecution is going to mount? You said this was a clue of it, so what other things might they use in order to try to prove, again, that this happened knowingly?
Well, there's a series of examples they're going to use. They've been sort of looking at his conversations, his public statements, and also we can see some of his private statements across the years to sort of show a body of evidence towards, again, that idea that he was very aware of what he was doing and choosing to do it anyway, because, again, his argument is that he had the right to keep these things, but he wasn't breaking any law. They're going to say, well, actually, he knew that he was breaking a law in doing so. So the whole prosecution case rests on that episode that we heard a bit of the audio just before. But obviously, you know, we're not even at a trial stage yet.
Okay, Roz, thank you very much for that update. That is Bloomberg's Rosalind Matheson. Coming up, we're going to have a look at some of the U.S. stocks moving in pre-market. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Aneeka Gupta in New York with Danny Berger in London. Let's take a look at some of the stocks we're watching in the pre-market trading right here in the U.S. Top of mind, Danny, is some of these EV stories. A massive move lower for Lordstown Motors, the ticker for our radio audience, RIDE. Down, get this, 57% in the pre-market, filing for bankruptcy after their Foxconn deal. Yes, this is the chip supplier and iPhone manufacturer. Fell through. Essentially, they had this big partnership on the books. It looks like they warned that this is what would happen if that partnership fell through. And here we are seeing Lordstown file for bankruptcy. At the same time, The likes of Lucid Motors, or Lucid Group, excuse me, higher by about 7%. They're coming, though, with perhaps some investment potential from a Saudi-backed EV supply story. The Saudis getting, I want to say, more and more airtime lately.
Yeah, I mean, look, when you're in an economically difficult time, the price of oil is still kind of holding up. That is what you tend to see. But I got to say, wow, 57% pre-market decline for Lordstown. I mean, this is once a company that was hailed by former President Donald Trump for saving automaking jobs. So quite the fall from grace.
Yeah, and the fallout of the GM kind of production halt as well. A very good point. But as we talk about the EV story, and speaking of production, we should talk about one of the high flyers, Tesla, as well, higher in the pre-market again. Surprise, surprise, higher by about 1.6%. Shares trading at about, just we'll call it about $245 a share. But Goldman saying, well, maybe this Tesla rally is going to be coming to an end. And Danny, from a valuation perspective, I mean, if we can even apply valuation logic to Tesla's rally, seeing a lot of green on the screen there.
Yeah, fair enough. But look, it's one of those things of like, do we need a catalyst? There's plenty of predictions in general that some of these more frothy names need to start falling. Deutsche Bank, I mentioned this earlier in the show, said stocks need to fall 3 to 5% just because they've gone too far. Are folks willing to give up on some of those big names? Look, if we get more concerns of a re-acceleration of rate hikes, you're going to look to the less profitable names like Tesla maybe to start falling again.
Yeah, especially when those margins are getting squeezed anyway. And I think there's real implications for the benchmark as well, given Tesla's weighting and the read through into a lot of the other big tech names as well. I'm going to end with one more tech name very quickly, Danny. Snowflake also on our radar. We talked a lot about the AI story. SNOW is your ticker there for our radio audience. Higher by about 3% there. What's important here is they're announcing an NVIDIA AI-related partnership. So look, they uttered the magic phrase, artificial intelligence. The stock is getting a boost. Are we surprised here?
No, I mean, you just say AI in your earnings apparently, and your shares get bid up. I will say, though, some of these AI names have started to come in. For example, AI, the ticker of C3.ai, that's lost most of its gains so far this month. So maybe some of that wind is coming out of the AI trade, Critty.
Yeah, certainly something to keep in mind when we talk again about how this is all going to be supported.
Yep. Maybe you just can only buy NVIDIA and that rally will continue forever. All right, well, that's it for Early Edition. Surveillance is up ahead. They'll be speaking with the IMF's Aneeka Gupta. This is Bloomberg.